Let's start the replay. So today what we're doing is a EURUSD replay. This is simply just exercises, kind of building my trading muscle. If I was like a basketball player, this would be me practicing like 3 free throws or layups, or this is just exercise. This is how you get better. You work on training your skills. You can't just come into trading expecting to be good, or you can't come into trading with your book of patterns and just learning that and have that guide you every day. You have to apply what you learn. You have to apply those patterns. So applying those patterns and learning those patterns it's exercise, and it's a workout. And if you're not working out, then you're not getting better. So this is something that I do. I used to do this on weekends, but now I'm going to start doing this every day, probably every night around this time. What time is it? 10 o'clock. So I'll probably do this every night, and instead of just on weekends. So let's go ahead and get started. And what I do is I first squeeze the price down, so I can't, it's all just one long line and I can't tell what's what. And then I just go back random. I'm not even really paying attention to the days or the time frame. I mean, okay, so the time frame that I normally trade on is a minute. So my style of trading is scalping. And if you're a beginning trader, well, let me start off by saying that none of this is financial advice, and I am not a professional. I'm an amateur. I'm still in the process of learning and getting better and just exercising. So do not follow my trades. I really don't show any trades because this is past trades. What I am trying to show, though, is how I exercise, how I work out everything. All right. Okay, cool. Whatever. So we are November. I guess this is as far back as it's going to go. So then we'll look. We have the Tokyo market. No, it took us all the way back to now. All right. So we're going to have to do that all over again. Went back too far. So like I said, not really paying attention to what's happening. I'm just trying to get back far enough to where, let's see, this is, what are we? November, still in November. All right, I think this is far enough. So we'll zoom in. Let's zoom in. And we are thrust into the middle of the Tokyo session. So the New York session was all this right here. And so this is if you wake up in the morning or if you start before any of your sessions. So we got London session right here, New York session right here. We got the high of New York and the low of New York. And then we have Tokyo session opened at 1800. And we are in the middle of it. And here's the low of New York. And it doesn't look like Tokyo is going to go for the high of New York, because the high of New York is way up here. And it's closer to the low of New York, so I'm just based on this, I'm guessing that it's gonna tap up right here in this area and then come down and retest this before it even attempts to challenge the high. And remember, this is the 1 minute chart. And what I look for is I'm looking for 2 to 3 pips So like, let's measure out 3 pips. 2. So this is 6 right here. From the bottom here to the top here, that's 6. So you'd have an opportunity to make that trade twice. If you're looking for 3 pips, you can make that twice. If you're looking for 2 pips, you can make it 3 times, which is decent. And we're normally I'm dealing with 0.02 size. I don't usually go big because I'm putting in 10 trades at most, 10 trades per session. So we're not making a lot of money. We're just trying to get good. So based on this, what I see here, I'm gonna start selling at this point. And let's hit play and let's see what happens. And we're going with a 1 standard lot. So let's change this to 0.5 speed and kind of just see, we got 1 tap, 2 tap, 3 tap. So let's go ahead and open a sell order. And my take profit will be down here, even though down there is what our target is, what we're expecting it to do. I'm expecting it to come down to about here. So far we are in the money, which is nice. Looks real good. We just let it play out. And if it comes up again, I'll probably open another order. I'll add to it. But right now I'm kind of happy with where it's going. Okay, so there we go. We'll open another order right here. And at this point, I am expecting it to go here, but at the same time, it can even come back to up here. So if it reaches up here, I'll open another order. So far we are $25, oof, 13. And it's crazy, the market moves. And this is exactly why you don't want to go size this big on your real account. Because every little move makes such a big hit. And we are back in the money. So we could probably speed it up a little bit. All right. And that would have been another good place to open another sell. But I was too busy talking. So let's see. See, I sold here. Sold here. I could have sold here, sold here. I'll probably sell here again. Yeah, sell here. And now it is looking bad. But like I said, it can go up to this point right here, up to about 60, 63. And let's sell here. And let's assume I have a $10,000 account. So right now it's gone up 1 level. We have a range here. This has broken that range. But it's not really breaking it because it's kind of staying at the bottom of it. So it looks good that it might stay down and then just come back down. But you never know, that's the thing. So if it breaks up here, then I'll probably just close at a loss. And it looks like it's going for it. Now I'm debating whether I want to open another sell order. So this was a really short range and it broke out of that range and now it's bouncing at the top of, bouncing off. But a lot of people are buying too, so that's the other thing. There we go. London opened and so far we are 65. What will London do? London will push the euro up. Probably should have closed in the money because I think it is bad. Yep, bad news for me. And the instinct that we're trying to build is that, like, what is your instinct telling you? What is the market telling me? And it's telling me that I really should close right now. Like, that's the feeling I'm getting. But is that feeling correct? Or will it test the low that I'm looking for? Oh, it's looking good. It is looking bad, looking really bad. So you have to have nerves of steel, and you also have to really, really feel, where's that feeling coming from? Is that feeling coming from a place of fear? Is the voice that's telling me close this order because it's not going to work? Is that like my parents who didn't believe in me, or my teachers who didn't believe in me, or just anybody who didn't really believe in me? Is that voice telling me these things? Or is it really myself being like, trust yourself? You know what's happening. You can feel it. You can sense it. So just trust in yourself. Don't listen to what everyone else told you in the past. And you can see it's a roller coaster. It's a roller coaster going up, going down, and going up, going down. And when you really, really experience the moment, you can start to see things. Okay, we have a low here, and it made a high. But then we made a lower low, and a lower high, and a lower low, and a lower high. And market reversed. So I am negative $200, almost $300. But do I hold? Do I close? What do I do? I'm still expecting it to go to this point. But the problem I think I did was getting in the middle of Tokyo, because you never want to get in the middle of a session. You always want to get in at the beginning. So I'm going to go ahead and close this at a loss of $600. And we'll see. We'll wait for New York to open before we place another entry. So let's go ahead and speed that up. And then we'll have a new high and a new low that we are challenging. And as you can see, so I want to show you this. The New York high was right here. And London completely shattered the high, creating a new high. So we have the New York high, New York low. Tokyo didn't really do anything for the market. It just kind of traded sideways with a slight move up. So if you're trading 2 to 3 pips and you're trying to catch, you can catch all that in these little moves right here. If you would sell all, or if you would buy, put in buy orders here, buy orders here, buy orders here, you could catch 2 to 3 pips, no problem. And that's what I would definitely recommend for beginner traders. Learn how to scalp first. Learn how the market moves. Learn how to operate as a buyer and a seller. And look for the opportunities to buy low and sell high. Is that right? Buy low and sell high? Yeah, because you want to buy right here, and then you want to turn seller up here. That's right. So another thing I want to say too is a good thing I got out right there, because if I would have waited and been like, no, I think it's going to go down, I feel like I'm right, this would have completely wrecked my account. Now, when I'm trading this way, I don't normally put a stop loss. When I'm trading regularly, like in my account, I'll put a 36 pip stop loss. That doesn't mean I let it run to 36 pips. I usually close it at 18, between 5 pips and 18 pips. I'll close it anywhere in there, depending on how I feel the market's moving. But 36 pips is just in case a news event or some kind of something happens in the market that causes a lot of volatility. Then I don't want my account to, I don't want this to happen. So a 36 pip stop loss would have been, let's see, if I would have opened down here, 36 pips is about right there. But where did I open? I sold here. Okay, yeah, so let's see. So I sold in about this area. So 36 pips would have closed me out right there. And it wouldn't have blown my account. It would have just costed me a large chunk. I've been taught to only use 4% of my account. And if I was managing my money right, then this would have only been 4% of my account. And then I would have just stopped trading for the day, took a break, and come back later. Or come back at the next session. So right now we're waiting for the London session to turn into the New York session, and it's about to happen. So let's take the speed down a little bit. And let's see what we're looking at. We have the London high right here, London low down here. So since we're at the top of the London, or near the London high, let's kind of see what New York does for us. Okay, so New York has opened, and it is, looks like it's going for the high. Ooh, I spoke too soon. All right. And at this point, I'm really not sure what the market's doing. I gotta wait. You gotta get a feel for the direction. So it's challenging the high, and it rejected, and it pushed through, but will it continue? It looks like I'm gonna sell. Oh, and there it goes. There goes the sell. So the next, there we go. So I'm gonna sell here. That's 32 in. 21. Oh man, yikes. See, that's exactly what we're talking about. That is why you want to have a stop loss. A move like that. Let's look at that. That was 17 pips. So 18 pips is what I'm talking about. I normally close out a trade if I think it's going in a bad direction, but that happened so fast. That's definitely stop hunting right there. And I'm trying to, what is that telling us? You know, this is why it's important to do exercises like this, because you see things like this and you be like, all right, why would this happen? Is there going to be a big move up because price jumped down here and then it steadily went up, and then right here we have this huge wick? So I think I might be on the wrong side, because they're clearing out a lot of traders, especially scalpers, right here. So I'm going to go ahead and close. And we're still negative $500, but that's fine. I'm going to turn buyer. Opening another order, adding to my position. we have the zone right here. And I'm thinking maybe I was right. No. There's a lot of second guessing, and you just have to learn how to stick to your guns. So we can put our take profit. Let's put it in this area, and then we'll put our stop loss down here, which would put us into negative even more. So far, it's looking promising, but looks can be deceiving, especially when it comes to the market. And it looks like it's going for it. And I'm even tempted to open more orders at this point, like right now. Oof. Was it too soon? Because we have a little action going here. High, low, higher high, higher low, higher high, higher low. But now we have a range, and bam, we did it. All right, so that brought our account up to just negative 100. And this is usually the range I trade. I usually trade 8:30 to 10:30 and call it a day. But let's see what we got here. We have the London high that we've barely broken. So I'm tempted to turn seller just for the remainder of the New York session. Well, let's give it a little let's give it a second to see what's happening here. So we can see the zone right in this area, right here, that we're getting some support. But is it going to be enough to keep it up, or is it going to fall back through? Because it's having a hard time. And it's taking so long. The bars are so short compared to back here. See, back here, the bars are at least 5 pip average, and then it starts getting smaller as the day drags on. And then it's just huge rejection, dropping. So it is having a hard time breaking up. So I'm going to turn seller. Start opening the sell order. Just in this area right here. Another one. Add to that position. I'm building a position. I could be wrong. You have to always accept that you can be wrong. Our take profit, let's put it back down here. And our stop loss, I really don't think it's going to go any higher than this. Let's look to the left and see what we have. We don't really have much, so we are like in new territory at this point. So I feel comfortable with this stop loss up here. Now in my mind, I'm playing with a $10,000 account. So negative 106 isn't that bad. And what is 4% of 10,000? See, I'm not good at math, so I have to use a calculator for that. It's $400. So this is roughly 4% of our account. If it comes up to here, then it's about 4%. And it looks like it might hit it. So where we were at earlier, got a little fly here, where we were at earlier when we were bouncing around in this zone, and then it finally bounced off of it, and I wouldn't say it took off, but it definitely went up. Look how close it came to our stop loss. I can't even tell you how many times that happens. And it's so frustrating because you know that if you would have just waited, you could have opened the order here and your stop loss could have been up here and never been touched. And then you could have had all this. And then it gets so close, and then it's going to come down, and then it's going to go back up, and it's going to hit, and then you're going to be like, why didn't I just close it and just reset and start over? It's a lot of that. It's like a huge mind game, and the player you're playing against is yourself. You're not playing against a market. You're not playing against other traders. You're mostly playing against yourself. You're second guessing yourself. You're psyching yourself out. You're psyching yourself up. And you have to learn how to just kind of just tune everything out and just exist in the market. Just kind of flow with it. And it doesn't make sense what I'm saying. But when you're really in it, there gets a point where you're just like you feel it, like you're in the flow when you're making a good trade after good trade after good trade, and you've got your 10 trades and you complete it and you're done for the day, and you're like, man, that was almost too easy. And it gets weird like that. But that's because you're in state, you're in sync with the market. But that's what this does. That's what these exercises and this workout is supposed to help you to continue to be able to just dive in and flow with the market. And that's why you have to do it a lot. Got skills, yo. We're just doing some trading, some Forex. Not the real stuff. This is all just exercises and workout. Yeah, I did that on purpose. I try to take the focus off of my face to make it boring, because I don't want, like, the star of the show is what we're looking at over here. And so when I start doing paper crafts again, I'm still debating how to do that. And right here we are, look at that, we're just bouncing off this area, and that makes you start to think, what's happening here? Is this support, or is this resistance? So is this resistance up here, or is this, good grief, I can't grab it, or is this support right here? Yeah, I go back and forth the whole camera thing. Like, do I want a camera? Do I need a camera? All right, no problem. And that's the funny thing about, I don't normally trade with, I use this as an example so that you can see where the support and resistance might be. I normally don't use, I'm like a naked chartist. And I'm doing that on purpose. I'm trying to just go with a naked chart. Like, no, I see a lot of people who are like, all right, we have this here, and you have this, and then you got this, and then you have this, and then if it breaks here and goes down, then we'll sell. And once it breaks this, and it's like, that's too much stuff. What in the world? How can you even? But it worked. I guess it works for some people. It just, every time I try to do something like that, it just doesn't make sense for me. And we're in the money. So we are 130, 140. Now the question, what should we do? I mean, we still have our take profit down here, which I'm still under the impression that it's going to come down here and bounce in this area. But I got that, I'm getting that spidey sense telling me closer trade, closer trade. And I'm going to go ahead and, no, I'm not going to close it because I still think it's going to come down to this point. I'm going to retest because you have to remember, this is the 1 minute chart. And if we took it to a higher chart, like the 5, 15, the 1 hour even, this bounce isn't that big. I mean, it took the whole session, but that's just because the chart we're using is so small. So I'm gonna hold. Let's see where it goes. You know, I might even add to my position. It comes back up. Because this could also be a retracement and then continue down. But the New York session is almost over too, and I don't want to be like, I don't like these swing trades. Number one, I don't like being in a trade this long. This is way too long and it's way too stressful. That's why I like scalping. I like getting in, I like making a little bit of money, I like getting out. It's quick, it's easy, and by the end of the session, you're done. You're not even worried. I had 3 trades open over the weekend, and I gotta tell you, man, that really, really sucks. I hate having trades open over the weekend because you just worry about it. You're like, man, I hope nothing happens. I hope the world is stable. And I'm gonna close 200, 188. All right, we're up $82. So we were out $100 here. And then from this trade to this trade, which took all stinking day, would have been from 11 to 4 o'clock. Yeah, basically a whole shift just to make $82, to profit $82. So we're going to wait for, we're going to fast forward a little bit. New York opens at 18. I mean, Tokyo is now open. And it's the same thing. We're looking at New York high and New York low. And where is Tokyo's kind of, I mean, it's close to the high, but it's kind of in the middle. So I'm not going to make any trades right away. We're just going to wait and see. Let's wait and see what Tokyo. The thing about Tokyo too is Tokyo usually just ranges. It usually just bounce. So if we wanted to make our 2 pips, we could easily get it done. Buy here, sell here. Sell here. Looks like it's going up. So it might be challenging this high, and then we have our support right here. So before it goes to here, it could come back down here and then bounce up. but it looks like it's just gonna go for it. Bam, there we go. All right, so do we want to keep buying? We're already in 1 hour and I haven't even opened an order. Yeah, I'm gonna be a buyer. So let's wait till it comes down. And that seems like a good spot to buy. Okay. So we have 2 positions, 3rd position, and we are gonna go for our take profit right there. And our stop loss, let's put it down here. Yeah, that looks like a good spot. And we could have just closed it right there, which I wish I would have, because look at this. Oh, it hurts. All right, let's see. What do we have? We are just bouncing around. It's going to come to that. So we got this low here. And we're trying to get it to go up here. And you can see it's trying. It's really trying. They're trying to take that price up. We have a nice range building right here, top, bottom. Hopefully it hits the top before it comes back to the bottom. That's what I like to see. That is what I don't like to see. But you can see it's breaking and then it's bouncing off these areas. Like there's an area, a zone here. So it hit the zone and all it has to do is continue to bounce up. There you go. See, it's bouncing off the top of this price range right here. And it looks like so close. Look at that. I might have to just close it manually. Oh my goodness, it is like right there. Come on, come on. You know you want to. You know you want to. Look at that. You know you want to. You are so close. I'm just gonna close it. I can't bring myself to do it. I have to get out of it. Oh. Did you see that? Oh man. And seeing the thing is, I kept telling myself, just close it, just close it. And those are the feelings and the emotion and the voice that you have to fight, because my trade worked out. And most of the times your trade will work out. I was going to close it here. I was going to close it here. I was going to close it here. And finally it hit. So we're up $324. And it's the middle of the Tokyo session, so I'm not gonna. Let's speed it up a little bit. Actually, before I do it, this is the thing that I want to talk about too, is that voice, that negative, that panicky, that scared, the fear of you're wrong, it's gonna reverse, you missed your chance, you missed your opportunity. You have to learn how to silence that. And even after a year and a half of doing this, I still get that voice, and it's hard to not listen to it. And that voice is also the same voice that tells you to jump in. It'll show you this happening right here. You'll see this and you'll be like, start buying, look, buy. And then you'll buy up here and then bam, they'll pull it down. or you'll see something like this, and then down here you'll be like, sell it, sell it, sell it, and so you'll start selling, and then the price goes up. So you have to tune that voice out, but you don't want to ignore it, because it's also the same voice that'll tell you, buy right here, buy right here, buy right here, and you'll start buying here, and look, the price goes all the way up. So it's not a bad voice. You just have to tune it in a certain way that it's working for you and not against you. Because that voice, that is your instinct. And yeah, it has been, but no worries. That voice is your instinct, and it's what, you know, what protects you and what helps you, what keeps you safe. But it's also like the voice that'll help you get through things and make you better. So you can't let it get the best of you, but you can teach it to work with you. So we got the European market. London is about to open at 2 o'clock. Why do I have it? Tokyo at 1. London at 2. Tokyo at 2. Oh, wait a second. Okay. 2 o'clock. Something is wrong with... Oh, yeah, New York. Okay. So something happened with the settings, but now they're back. They work again. So this is what I do. Or I used to do this on the weekends. But now I can't just let this be a weekend thing. I have to do this daily. I have to... It's like jogging or doing push-ups or sit-ups or lifting weights. And it's funny that it took me this long to come to that conclusion. I should have been doing this more. So now this is basically, we are buying money, foreign exchange. It's called Forex. What we do is, when price is low, you want to buy, and when price gets high, you want to sell. So what we did here is I opened a buy order to buy. I'm trading the euro versus the dollar, so I wanted to buy the euro, and when it got to this price up here, I sold it. So, and I made, I think it was like $200. And this is all just practice. This isn't real money. I have my real account that I trade during New York in the mornings. And it's just I wouldn't say it's an easy way to make money. It's I would say it's a fun way to make money. It's extremely hard, and it requires a lot of time, a lot of study, and a lot of dedication if you're willing to give it all that. I've been practicing for 1.5 years, and I can honestly say that I'm finally breaking even. I'm not losing money anymore, but I'm not making money. So it's no, I've definitely lost more money than I've gained, but that's because a lot of traders, when we get into this, you enter the market wanting to make money, and it's a terrible way to come in. If you want to start trading, you have to start practicing first. And I went in using real money instead of practicing, and that's how we lost a lot of money. Also, I didn't look, when I first started trading, I really didn't take it seriously, and it was kind of just like for fun. And I think that's just how a lot of people get introduced to this. But the ones who succeed at it are the ones who put in years and years of learning. Like, this is a skill you have to develop. This is something that you have to train for, that you have to learn, and you have to experience it. And one of the best ways you learn from it is by losing. The more you lose, the more you learn and you understand. And so my problem was I was using real money and I was losing a lot. And I would win some, but I would lose more. So it's kind of like stocks, but stocks are... I can't say much about stocks because I don't trade stocks. One of the reasons I don't trade stocks, though, is because with stocks, it's meant to continually go up. So it pays to be a buyer. But for Forex trading, for currencies, it goes up, it goes down, it goes up, it goes down. So there's always a chance to make money somewhere. And with stocks, you have to really know how to sell and how to buy things. So Forex is kind of like the level 1, the entry level, and then you can work your way up to like stocks and indices and other things like that. But I would definitely recommend learning how to trade on currencies. And I trade strictly EURUSD because there's a lot of liquidity. It's when there is action, it's fast, and it's for my style of trading where I'm trying to make 2 to 3 pips per trade. It's really fast, it's really fun, and it fits my personality because of I gotta constantly be, what's the term? Not agitated, but I gotta be involved, really involved. So it depends on really what you're trying to do. If you're just an investor, if you just want to invest in the money, then you'll watch the market, and when it's low, then that's when you'll put your money in, and then you can wait for when it gets high, and that's when you sell. So it could take, like, you can for me, or for scalpers, you're in the market as long as you want to be, and I only want to be in the market for 2 hours a day. So normally I'm in it 2 hours a day, but lately I've been trading New York session, Tokyo session, and London session, but I've only been trading the open, so that's 2 hours. So 6 hours a day I'm doing this. But my main goal is to just do it 2 hours a day during the New York session. But then swing traders, you'll hold your trades for a lot longer. You can hold your trades anywhere from a few hours to a few days to weeks and months. It all depends on how much money you have invested. For small accounts, you really can't afford to be in it that long. For larger accounts, you could be in it for months. So depends on what kind of action you're looking for, really. But I mean, it has been one of the most fulfilling and funnest things that I've ever done, is trading. It's just it'll be a lot funner when I start making money. But I have my savings set aside for it, and right now I'm only using like $50, and I'm trading at 0.01 size, which is like 10 cents per trade. So, as opposed to what I used to do when I first started. But I guess any other questions, feel free to ask. But I guess to briefly answer, how often do you need to check up on it? It really all depends. Let me see if I can show an example of how fast this would go. So we're in London right now, and price went up we have the Tokyo high right there. And of course, we're going to go for it. And I'm going to buy right here because, yep. So bam, we're out. So that fast, sometimes it happens that quick. I opened an order at 2:14 and I closed at 2:18. So that would have been 4 minutes quick and made $50 in 4 minutes. Now that's called scalping. And I mean, that's fun. I mean, that's fun for me. Like, I don't mind doing it. I don't mind waking up in the morning and getting everything ready. But that was, normally I'm just trying to catch 2 pips. So let's see how many pips that was. That was about 7 pips right there. And then this is one standard lot. So each pip is worth on a standard lot, I want to say $1. No, $10. Yeah, that's right, $10. They have applications and programs that you'll use, or you can connect it to the chart here. So like this one tells me that I'm buying 100,000 units at $1.7405, and then I sold 100,000 units at $1.7460 right there. So that was a difference of 55. And what I'm trying to, let me see. Let's see if I can open up a picture real quick. Something that shows. All right. It'll be something like this. So when you put in an order, yeah, pretty much, or actually $10 at this point, at this size. So when you put in an order, it'll show you what time, it'll show your ticket number, it'll show what you were trading on, was it a buy or a sell, and what your size was. And then it'll show how much commission you paid. And this is all from the program that you're using. So I use MetaTrader 4 or MT4, and I'll show that some other day. Maybe tomorrow night I'll get that ready. And it shows, okay, so I was trading at 0.1 and I made 2.5 pips, 2.7 pips, 2.7 pips. So each pip was roughly worth $1. So I made $1.05. I made $2.50 on that one, $2.70. And the total for that day was $22.70. Minus commission was $19.10. So yeah, for this at least was what a lot of brokers or companies that you can use to trade, they will give you something called leverage. And sometimes you have, I think in the US you can only go up like 50 to 1. So for every $1 you have, they'll cover you $50. But there are companies that'll give you 500 to 1, like 200 to 1, 300 to 1, or 500 to 1. So for every $1 you put in, they'll cover you $500. But when you have those kinds of ratios, your chances of losing your account if the price moves against you. So like, let's say I sell up here. So I'm going to open a sell order and see I'm negative. Okay, I'm positive 11. All right, let's wait till I go negative. Okay, so it's going on up. Okay, see, so now I'm negative $20, $30, $40. So when you're using leverage, that price move against you, like, really, really hits you. If I have a small account and my leverage is high, I probably would have blown an account right now, because that I wouldn't be able to cover it. And when you can't cover the amount that they're lending you, they liquidate your account, which means they close your account, they take all your money, and you lost. So it's interesting now that I explain it, and it should be scary, but man, I love the thrill. I love the excitement. So I only trade like $50 at a time, and you can see from that photo, where was it? That, well, that's actually pretty big for a $50 account. I'm trying to think, is this a really? I think this might have been a demo account. I'm gonna have to look. This was from a couple weeks ago. I'll have to check up on that one. No, I understand. If someone would have tried to explain this to me when I was a kid, or even when I was younger, I don't know. I think I would have just focused on the possibility of how much money you can make. One of the important things, I think, if you want to get into this, yeah, that seems right. 500 to 1, and you're buying 100,000 units. Yeah, so if your minimum is $200, then yeah, you should at least have $1,000 to cover that, or even eight. Like, I don't know. So I mean, like, yeah, your minimum would be $200, so you need at least $200 into your account. But if the price moves against you, like, what would it be, like 200? Like, if it moves against you $100, that's half of your account already. So you have to really, really be careful with your size. So like, I can take this 100,000, I can take it down to, so 100,000 would be $10 a pip. So every time it moves up one, so you take the fourth decimal place, 1. So every time it moves up, that's $10. But then you take it down to 10,000, and every time it moves up one of these points here, and it's only like $1. But as I was saying, one of the most important things, I think, if you're looking to get into this, is you have to find a mentor, like somebody who's willing. Do not do this alone. The first year, let me see, when did I? Yeah, so like the first year I did this, I was just doing it on my own, just trying to figure everything out. And it's not like, if you wait too long, the price can move against you. So like right here, when I sold, which was like right in the middle. So if I wanted to buy, I would buy down here, and then you could profit when it's up there at the top. But then you can sell up here, and hopefully price goes down. But I sold down here, to make that point. So I sold here and then the price went up. So I was at a loss at $59 to be exact. So if you have a big enough account, so like if I had $10,000 and I only I only bought 100,000 units, I could probably sit on this for a couple days until it came down. So let's see. All right, so see how price goes up, price goes down. So it all really depends on your account. The more money you have in your account, the longer you're able to hold. But if you have a small account and you're trying to make money fast, you're not going to be able to hold very long. You're going to want to get in and want to get out, which is why scalping is ideal for small accounts. But it's also very, very tricky. So I can't believe I'm in profit here. Funny. And see, and then it just keeps bouncing up and down. So the smart thing would be to see this area right here. See, maybe we can start again right here and do the whole, okay. So I'm going to buy right here. We're going to watch it. This is the whole buy low, sell high in action. Let's slow it down and let's buy right here. We're going to buy here and then we're going to sell it up here. Okay, so we're going to close it and then we're going to open a sell and then we're going to close that order down here. So we bought low and we're selling high, and then we're going to close that. And then price, we're going to buy here. Price is going to go up and we're going to close it. I mean, we can close it here, right there, and then sell here. Now we could have even waited for there and then close there. All right, so that is what just now, that's buy low and sell high in action. This is what they're talking about. We bought down here, price went up, and we sold it up here and we made a profit. Then we sold when the price was up here and we closed that order down here for a profit. So that's the whole buy low, sell high. And I guess I'm assuming it's the same with stocks. I just think that stocks you have to hold longer. See, I don't really know too much about stocks. I just know about Forex. This is my bread and butter. This is what I'm dedicating all my time to. But the I mean, that looked easy, right? The problem is that you never know which way price is going to go. Which is why I'm doing these exercises, because this helps you understand, this helps you see things like this area right here where price is bouncing up and down, and you can have a chance, or you have the opportunity to make money in areas like this. And the area like this happens a lot. Like there's always a place where price bounces back and forth. Yeah, exactly. Right. Yeah. Exactly. So when price hits, I mean, basically all you do is you draw a box and price will bounce around inside that box. So we have a box right here. Same thing. Buy here, sell it up here. 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 And then if you bought down here and you hold, like this is a huge, huge place to make good money. right there. And sometimes you can catch that. Yeah, so if you so let's open a sell order right. Wait, let's go back. So let's go back here. And let's say that we think price is going to go down right there. It really depends on how much you put in. So like at 100,000 units, I'm buying 100,000 units of the euro. And at 100,000 units, it's like $10. So every time this moves at the, man, I want to point it out. It's, so you count 4, 1, 2, 3, 4. Like I'm right here in this little corner right there. See, does it show? Okay, yeah, so it shows up on the screen. So every time this moves up 1, then that's like a pip, and you get paid per pip. So if it moves up from 44 to 45, that's 1 pip, so that's $10 based on this. So it's based on 100,000 units. And if you're selling 10,000 units, then each one of those points, so from 43 to 44, that's $10. Wait, that's $1. That's right. It's $1. So, I mean, I'll have to do this in the MetaTrader program, but I'll probably do that tomorrow night or some other night. Hopefully, if I do it tomorrow night, you'll be there. But so let's we were gonna sell from here, so let's open a sell order at this price right here, because we're like, okay, yeah, price is going down, and we think price is gonna continue to go down. But remember, this is where price went up again. So we'll let it play out. Price goes up. We're -6. We're -40. And so I'm pretending that I have a $10,000 account, so I can afford this loss, or I can afford to hold it. When you're in a trade and you're negative money, like we're -186, we call that drawdown. So I'm $186 in drawdown. I need some water. My throat is starting to dry up. And this is called a bad trade. And we have to figure out what we're going to do. So we'll hold it. And we'll wait. And see, and so price came down. So price went up, it was against us, and then it came back down. And the smart thing to do is just to close it as soon as you're back in the money. If you didn't anticipate a move like this and you just expected price to keep going down, just close it and reset and start over. Yeah. I think that's correct. Let me see if I'm... Yeah, that's correct. Yes. So, I mean, that sounds... Man, that sounds great, doesn't it? It sounds ideal. And it sounds easy too, but man, it's so hard. Actually, it's not even hard. It's just, it's that voice inside your head, and you have to develop your instinct for it. So it's not hard. It just takes a lot of training and a lot of experience and a lot of learning. Yeah, drawdown, man, you're getting it. It depends on how much you're willing to lose. So like if it moves 10 pips in the opposite direction and you close it, you lose $100 too. So let's do this again. let's say right here, we think price is going down. So we put in a sell order. Now, here's our take profit. And let's say we think price is going to come down here. So where did we open? 737. Okay, so let's say we want $100. That's our goal. We want price to come down here. And we don't want price, we don't want to lose more than 50 bucks on this trade. So you'll put a stop loss in. And our stop loss is, how many pips is that? 5 pips up, of course. So we put our take profit is 10 pips away, and our stop loss is 5 pips away. Now a stop loss is what helps you from not losing too much, because if you don't have a stop loss, then let's see what happens if we don't have a stop loss. So trade's going good. Suddenly it reverses, it's going against us, and we're out $80. Okay, so we're out 90 bucks, and we're like, oh, that's too much money. I didn't want to lose that much. I really wanted the price to continue going down. So it didn't come anywhere near our target price, and it went up. So if we go back here to where we opened our trade, okay, so it opened our trade again. Let's go our take profit. We'll set our take profit at 10 pips. And then our stop loss, we'll set that at 5 pips because we don't want to lose more than $50 on this trade. We don't want price to go against us too much. And so once it hits that stop loss, it'll close the trade automatically at $50. So all we lost was $50. So that's how you control how much you lose. You always set a stop loss. Otherwise, let's see. Let's make this scary. So let's say you come in over here and you're like, okay, I'm going to sell because price is going down and I think it's going to keep going down. I'm going to set my take profit for 10 pips. And I'm not even going to set a stop loss. And you're like, whoa, 75 bucks, 95 bucks. Oh man. You start freaking out because you're losing so much, $130. And you're like, okay, I got to close this quick. And so you close it manually. And you're out $130. But we can come back here, sell it again, and set our stop loss again at 5 pips because I'm only willing to lose $50 on this trade. Let's see, 50 bucks right there. And then we want to make $100. So where last time when the price kept going up and we were out 130 bucks, this time price goes up and it closes automatically, hits our stop loss, and it's like you're out $50. So stop losses are super important, and those really, the stop loss is the thing that ruins a lot of traders because they think they don't have to put a stop loss in and they think they can control it just by watching it. But price can, let me see if we can get to a place where price moves very, very quickly. Man, that is such a nice bounce right there. We're just back and forth. Like a great opportunity to make money right there. See, look at that. Sell, buy, sell, buy, sell, buy, sell, buy, sell. You could, but I mean, you could always wait, but sometimes the moves are so big that it's easier just to close the losing trade and start over than it is to wait for the trade to come back into profit, because you never know when it's gonna come back. And this is why I like trading on the 1 minute chart, because the price is always, oh, here we go. Like, here's a perfect example. If you open a sell order right here, so let's take it back here. No, there is absolutely no way to predict spikes. Spikes happen, and they usually happen around news events, which now news events are predictable because the governments tell you when they're going to have a news event, and those are when spikes happen, but there's never any telling which way the spike is going to go. Man, I really need some water here. I have a cup with me, but and I don't want to leave right now. So like, here's kind of a spike. Let's say we sold here. We didn't put a stop loss, and we put our take profit for the low. Bam, that huge spike just happened. Too fast. Let's try that again. Couldn't even really appreciate it. All right, let's take it off. And we see price going down. We think it's going to go. So we're going to sell at the top, thinking price is going to go down here. So let's set our take profit right there. And we're not going to put a stop loss because we're confident that price is going to come back down. So we're in the money. We're doing good. All right. Excellent. Well, you know, we'll wait because price is definitely going to bounce off here. And we're still in the, okay, it's only $4. No worries. Only $8. No worries. We're looking for that big money, that big $200. We're waiting for it. Okay, well, I can close it anytime. You know, anytime I can close. It's not that much. And you start to, your breathing starts to get a little heavy, and you're like, whew, man, okay, $100? Yeah, I can afford it. I got a 10,000. And then bam, right there, you get that spike that closed you out at $500. So if you had a $1,000 account and you didn't put a stop loss in, and you couldn't catch this candle, that closed you out at $500. That's already half of your account. Man, that hurts even to see it. $500, and it happened so fast too. And so now, to answer your question, if we didn't close it at this price and we were still in it, we would have to wait. So this is, let's see, this is the 3rd, November 3rd. And we want price to come back here. Then we would have to wait. I wish there was a way to do this a little bit faster. We got price bouncing around. and let's say this order's still open, plus you're in drawdown up here, and this was 500 bucks, so you're probably $1,000 now. So your account is just cleaned out. So anyway, that's why it would have been better to, instead of waiting for price to come back into your favor, it would have just been easier to close this at a loss at $50 than to wait for price to come all the way back. Now, if you had a $10,000 account or a $100,000 account, you could probably ride this out and just wait and wait and wait and wait and wait. And see, this is already like 2 days. This is the 3rd, the 4th, and the 5th. So you're waiting 2 days and price still hasn't come down. So here comes the 6th. So we're looking at 5 days. Yeah. It'll automatically close it, and you don't even have to worry about it anymore. But now I'm really interested to see when price comes back down, because it has to balance this out right here. So eventually, I think sometime it will come back down at some point. But yeah, that's a perfect example, is that you will be waiting forever sometimes for your price to come back. And that's a gamble you don't want to take. You don't want trading to be gambling. You want this to be strategic. So let's bring it back here. And let's say you open that sell order. You set your take profit to retest the low. And then you set your stop loss at $50. Because you don't want to lose that. Let's say $100 even. And so it's going to hit that spike. Bam, you're out. See, you were out right here. So you're only out $100. So that saved you a lot of heartache. Pretty much, yeah. So that I would say the sell, when it gets to the top, that's where you want to sell. Down here would have been the best place to buy. But that would have taken some really, really, really strong instinct to see that coming right there. You would have had to... I mean, it's not impossible to see a move like that, but you just have to have that kind of experience to understand, okay, so we have this huge move right here. There's different markets. So the London market, that happens from 2 to 4. All right, these are the different markets, the different sessions of trading, like of the country's trading. So this box right here is when New York trades. This is when North America opens, like the New York Stock Exchange. And then this is when Tokyo opens. What is it? I can't remember. The Tokyo Stock Exchange, to make it easy. And then this box is London Stock Exchange. So these are the boxes when you're going to get the most activity. Right here at the opens is when you want to trade, because that's when you're going to get a lot of high activity. This right here, I don't know what, that must have been some kind of news event where the news came out and said that the euro was going to do good, and people just bought it. And this is an indicator. This is what they call an indicator. So you can turn that on and off. And this is just something I use to know when it's time to start trading. So every morning I'm up at like 7:30. You can't always count. Well, you can sometimes, most of the times you can count on London because it's Europe. And if we're trading on the Euro USD, they usually buy their money. Just like when New York opens, we usually buy the dollar. So we sell the euro, buy the dollar. And Europe buys the euro and sells the dollar. And we do the opposite. Most of the time that's the case, but it's not always. And when you start getting comfortable, you could, like, that's when you get wrecked. So you gotta watch out. But yeah, you can see there is a rhythm to it. So we got London goes up, New York brings it down. London goes up, and let's see what New York does to it. Actually, we can't. I was hoping we could fast forward it a little bit. So see, right here in this session, it looks like New York is taking it up. So most of the times it's the case, but sometimes, you know, it does the complete opposite. Let's see if New York brings it down a little bit. No, it looks like it's just staying in this range right here. Oh, it's coming down just a little bit. Yeah, it is kind of late. And it is super fun, and I like it too because of that. But yeah, see, so you see, oh, and over here, see, so London went down, but at the very end it brought it up, and New York brought it back down, but then it brought it up. So it's, there's a rhythm to it, but it's not always a consistent rhythm. Sometimes it's off tempo. But there are just little things that you can count on. But yeah, it's kind of fun. This is why I think this is why I gravitated towards Forex trading, and why I've been sticking with it for a year now. But it has already been an hour and 30 minutes, so I am going to call it a night. I'll be doing this again tomorrow night too. So if you want to talk then, and if you want to ask more about it, yeah, Tokyo kind of just stays like this a lot. So it's if you can like tell which way the market's going to go, you can probably just open an order at the beginning and then just ride that all the way through and then close it. But yeah, hey, thanks for sticking around, Got Skills. And of course to the viewer in the back, thanks for watching. And just a reminder that neurons that fire together wire together. See you tomorrow night. Let me know if you have any more questions. The talk box is always open. Good night. So dry. Remind myself to bring water tomorrow.